In this video, I will explain the basic principles of stock market investment and the main strategies for making money on stocks. Let's get started. There is an exchange where securities are traded, such a market with various departments. But they won't let us in just like that. For this we need an intermediary. This is a broker who has a license and who buys or sells assets taking a commission for it. We go to the department we need and buy this or that product through a broker. Stocks are securities that confirm the owner's right to a certain share in the business. Any undertaking for development needs money. For this reason, companies turn to investors for help. As a result, the company receives money for which it develops and grows. And the investor receives a part and an agreed percentage of profit, dividends. The share of the company and profits are reflected in the shares. The owner has the right to sell securities to third parties and receive remuneration for them. Basic strategies for making money on stocks. Participants use many different strategies to earn income from shares. They have advantages and disadvantages. Consider the main ones. 1. Trading. The essence of this method of earning is to acquire at low cost and then resell them at a high price. The stock exchange does its best to promote this. Because in minutes the level of quotes changes significantly, both in the direction of decreasing the cost and in the direction of increasing. But how to make money on the stock market will be prompted by experienced brokers. Factors that affect the value of securities. The amount of profit that the company receives. Situation in the stock market. The mood of the participants in the game. Political situation in the country. Other. To trade, you need to be aware what the market is based on, how to make money on stocks and constantly monitor the slightest changes. This is not a passive income option. In this case, it will take a lot of time, attention and developed intuition of the trader. 2. Acquisition and long-term holding of shares. Having bought a share of this or that enterprise, company, the investor receives profit from it. Earnings are made up of the difference in value at the time of purchase and sale. Thus, long-term investments are secured. The process stretches up to 10 years. This is one of the safest options for investing money, but at the same time the most unprofitable. This method is acceptable if the investor has a large capital. 3. Receiving dividends. This option is also long-term, because it has high reliability and low risk. Important. Dividends are not a permanent and planned source of income, because at any time the management of the company has the right to cancel the payment of a share of profits to shareholders. The advantage of dividends is that they are independent of quotes. Because the participant receives a profit, the amount of which is approved in advance at the meeting. More often than not, dividends are paid once a year, but sometimes every quarter. The disadvantages of dividends include the fact that each company has its own opinion about the accrual rules. Because there is no single developed policy, and it is unlikely that it will appear. 4. Investment portfolio. An investment portfolio is a set of financial instruments, but the basis is stocks, futures, bonds, in the ratio 50/30/20. Or an investor forms a portfolio of securities of a single type, for example, bonds or stocks, but purchases from different companies. It is believed that the investment portfolio is a reasonable and safe method of making money on securities. But it has the advantage of being diversified, because it is unlikely that all companies will collapse at once. It is worth noting that a well-formed portfolio makes it possible to enrich yourself. This is how many now successful traders receive their income. 5. Transfer of investments to management. This way of earning is similar to a bank deposit, but the difference is that the percentage of income can fluctuate up or down. The meaning of the strategy is that the intermediary transfers the securities purchased on the market for the management of the selected investment company. She can do whatever she wants with them, aiming to get the maximum income and protect them from losses. A similar model is used for medium-term investments, because it brings in more money. 6. Acquisition of shares before the closure of the registries. Some investors are looking to purchase securities before the registries close. This will allow you to quickly receive dividends. Then, waiting for the price to rise, the papers are resold. 7. Sale of shares before the closure of registers. Such a strategy is as follows. The participant purchases shares during the year, then sells securities before closing. He does this because of the rise in prices during this period. The rise in value is associated with the payment of dividends. 8. Long-term investment with blue chips. Blue chips are stocks of popular companies. They provide a steady income. Profitability is small, but the method is in demand as low risk. Of course, these are not all strategies and ways to make money on stocks, but these are the main and popular ones. Watch other videos on this channel and you will definitely get a lot of knowledge and find your way to enrichment. Subscribe to the channel, put likes, write your opinion or questions in the comments. It will be interesting for us to read. Good luck and see you in the next videos.